Good morning and welcome. You are watching Buy Now, Sell Now on ET Now. I'm Nupur and joining me is my colleague Kavita. Well, over the next 1 hour, we will be answering your questions on what stocks should you hold on to, which ones should you sell. But first up, let's take a quick check on the markets. Well, the Nifty around the 24,592 mark, so it's been pretty flattish since the morning. The Nifty mid-cap also up on the higher side. We are seeing Nifty Bank and Nifty Auto being one of the top performers today. Let's quickly look at the top gainers. Now, in the top gainers, of course, Paytm, one of those top gainers, brokerages coming in very bullish on that one. And in the top losers, we have Aditya Birla, Power Finance Corp, and Inox a win. Just a bit more about two firms which we are seeing really trading up high. One is Aarti Pharma. Look at that counter. It's moved, at one point it moved nearly 15% up. At this point in time, it's moved up 20%. So Aarti Pharma, one of the top gainers. Now, another one that we'd like to focus on is Hitachi Energy. That's also been soaring over 8%. It's had a stellar quarter one, and it has had a net profit doubling year on year. So Hitachi Energy up about 9.69%. So another one of the top movers. Let's now go across to Sajid, who joins us for a quick F&O snapshot. Hi, Sajid. How's it looking like today?
Morning, Nupur. It's been a flat morning for the indices, whether it's Nifty or the Sensex. The Nifty marginally higher at this point in time, but it's seeing some short positions getting built. So the open interest positions are up by nearly 0.6%. Look at the Nifty Bank there. That's absolutely flat. The premium at 200 points, and again we're seeing some short positions coming in, especially on the PSU side. The Nifty Bank, we've seen SBI, Bank of India, Bank of Baroda, PNB all adding some short positions today. But HFC, ICICI and bnsn are adding long positions in today's trade. Call and put writing, initially morning was a heavy call writing day. Now we're seeing some put writing coming into play at especially 24,600 levels. The distribution shows that it's a neck and neck thing which is coming in from the open interest point of view. So we may see a breach coming in about 24,600, and if there's more put writing which comes into play there. But look at what's happening in the futures. You have some of the stocks which are active today include stocks after Hitachi after the earnings. The stock up 10%. Paytm is up on the back of that upgrade that has come in from Bernstein, up nearly 6%. Titan is up 3.4% after the earnings which have come in. In the futures losers, we have PFC, REC, and Lupin all seeing some short build up down between 3 to 5%. Open interest gainers include Amber, GVT&D, Titan. Amber and GVT&D seeing some short build up happening, and open interest losers include Keynes, where the stock is on the open interest is down nearly 7.5 on the back of long unwind. L&T Finance and CAMS are other stocks there. Most active, Titan, 5,000 August call is seeing some unwind after the stock has moved above the 5,000 level. 1.32 lakh contracts getting unwound at Titan there. SBI 1100 August put, again seeing some 2.9 lakh contracts there, but the stock hovering just below the 1100 mark at 1,089 as we speak. So the market all set for a movement with the index in positive and open interest still up nearly 0.6%.
All right, Sajid, thank you so much for all those updates in the F&O segment. But then let's get connected with our guest who will be answering your stock-specific questions, Jigar Patel, Gaurang Shah. Hi, good morning. Welcome, both of you. And before I start taking the questions, let's quickly flash the QR code also on the screen so that the viewers can scan it, get connected to a WhatsApp number and send across their stock-specific questions. Write down the name of the stock, the price at which you've bought it, and the timeline till when you want to be invested. We'll get you a technical as well as fundamental take on your particular stock investment. Buy now, sell now. You have a 1 hour window to send across your questions, and that's the QR code. Just scan it and you'll be connected to the WhatsApp number. All right, good morning and welcome both of you. And Gaurang, before I dip into our WhatsApp questions, a quick market commentary from you. We have recovered from the lows, but how's it looking the start of the week?
Hi, Kavita. Thank you so much for having me on your show. Good morning to all the viewers of ET Now, and to you and to Jigar as well. Small disclosure, which is required as SEBI regulation, Kavita, that all recommendations that I'll be sharing with you this morning on your show They're part of our fundamental research team recommendation from a long-term point of view. Our company, Jyojit or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest, but we share similar investment ideas with our clients. They might have their investment interest. So the view, Kavita, this week is that if there is not too much of negative news flow or overhang, specifically from the last couple of months that we all have been discussing is the war in the Middle East, then my sense this morning, what we have lined up this week, that 24,650 on Nifty spot, if we get a closing around these levels or maybe a little bit above these levels, then we are possibly marching towards 24,800 and 25,000 on the Nifty spot. And that, again, we will reassess the situation at that point of time. And if all goes well, then possibly a move about 25,000 cannot be ruled out. It will not happen immediately, Kavita. It may take a couple of days or maybe possibly by next week if we do get a strong positive momentum. And the good thing, Kavita, is that Q1 earnings have been very, very supportive, because the view on Q1 earnings this financial year was that it would be a little bit subdued, below the weather, because of the overhang of war and the rising crude oil prices. But nevertheless, whatever we've seen up till now in form of Q1 has been extremely supportive. So hoping for a close about 24,650, and then the next stop would be 24,800 and 25,000.
All right. Hi, Gaurang. This is Nupur here. So I just quickly want to take you through one of the questions that has come in. And we've got a question from Sumant Kumar, writing in from Bangalore, holding about Omni Tech Engineering. He's holding about a quantity of 800 shares, wants to know whether he should hold the stock, and what's your broader view on the stock for upcoming movement. He says his entry price is 430 rupees per stock. So Gaurang, your view quickly.
Hi, good morning to you as well. So, since we don't have coverage on Omnitech Engineering, but we remain positive on the sector, and I think the sector is going to evolve over a period of time. My sense would be to look at, if you're looking at this sector, then look at frontline names. That would be a better play, because sometimes small to mid caps, they kind of fail to deliver on the earnings front, and which may possibly catch you on an unpleasant, field. So if you do want to look at this sector, look at the frontline stocks. No specific comments on Omnitech Engineering, since we don't have a coverage.
Jigar, if you could come to you on that one, since Gaurang doesn't have coverage on this one. What's your view?
First of all, very good morning, all of you. See, in terms of Omnitech Engineering, already we had a correction of 30% from the top. Almost 750 was the top, and currently we are sustaining about 550 levels. So as of now, there is a flatline support from the Ichimoku cloud, which comes around 535, 530 odd levels. So as of now, keep holding this particular counter and keep a trail stop loss of 530.
All right, so with the stop loss, you can be in Omnitech Engineering. But let's move on. Next question is on Bosch, and this is from Mr. Hussain Reddy from Hyderabad. Entry price is 30,000. He wants to know whether he can book partial profit and hold the rest for almost a year's horizon. Gaurang, do you have it in your coverage?
Bosch, Kavita, the auto ancillary stock, we in fact had a coverage earlier. Then our target price was in place. We had put the stock under review, and currently we do have a buy recommendation on Bosch. Kavita, our approximate target from the long-term point of view is about 46,200 plus. And one more thing I would like to add, if you allow me 30 seconds, Kavita, is that all the auto ancillary stocks, OEM segment providers, tire manufacturing companies, and battery manufacturing companies, all of them are going to do well, because we expect the auto sector overall to do well. And Bosch happens to be a very niche player, which supplies very crucial components for the overall safety of the vehicle. And they've got a very strong backing from its parent company, that is Bosch AG. So my sense is that if you're not in a hurry, and if you have a little bit of longish time horizon, then why let go of the profits and the targets that we have set aside? And if the earnings, Kavita, are better than what our estimates are, we will definitely revise the target price upwards north. But we'll have to wait for the earnings to unfold, but remain positive on the stock.
All right, so our next question coming in from Manju, writing in from Mysore, and the stock that she's holding is JSW Holdings, 2 shares of that. The entry price was 25,077. She's asking, what should I do? Can I average it or should I exit? Well, holding a bit of a loss over there. Jigar, what's your view on it?
See, almost the counter is down by, I guess, 50%, almost 40-50%. But currently, there is a chance of getting a, breakout about 12,850 mark. So as of now, this would be a hold, keeping a stop loss of below 11,500 on daily closing basis. Once we get the closing about 12,800 approximately this level, then one can go and add even more at this particular level. And overall, gradually, we are expecting 15 to 16,000 level as a target.
All right, so with that, it's time for a short break as well. But Gaurang and Jigar are still there with us. You can scan the QR code and keep sending us your questions.
Welcome back. You are watching Buy Now, Sell Now, and we're continuing to take your queries. The next one coming up from Hyderabad, G. Bhikshamaya is writing in to us, and the stock that he wants to know about is Universal Cables, holding a quantity of 50. The entry price, he says, is 300, and wants to know whether he should add Universal Cables or go for Polycab. So, Jigar, would you like to take that one?
See, I guess current market price of Universal Cable is somewhere near 1,664. So I guess I would advise him to first of all, book the profit and take out all the capital which was invested earlier, and overall keep the profit at the table as of now, and trail the stop loss with a level of 1,500. If this particular counters goes below 1,500, then definitely one should exit. And as of now, there is no point in fresh entry because the risk to reward ratio is not favorable.
All right, let's move on. Let's take Nishchay's question, and this is on HAL. Entry price is 4739, and he wants to know if he can book his profits and make an exit. All right. Tejas, I'll come to you. Would you recommend him to stay put for a couple of months more?
Definitely in HL, there is a huge breakout. First of all, there has been a falling trend line, which was almost 1.5 year old, and previous week we got a breakout about this level. So as of now, he should keep holding this counter and keep a stop loss of below previous week low, which is somewhere near 4,600. And overall target I'm expecting is somewhere near 5,200, 250.
All right, the next one coming in from Coimbatore, Sampath Kumar is writing to us and holding a quantity of 18,000 shares of Infosys. His entry price, of course, 750 rupees, and he's been holding it for more than 25 years. Gaurang, would you like to take this one? Wants to know what should I do in the long term? Not really mentioning how much time he's planning to hold, but since he's been holding for 25 years, we assume that he wants to know the long-term view.
Absolutely, Nupur. And, after getting all the benefits of split bonuses and dividends, I am assuming that the cost would have been much, much lower, because you need to factor in all this when you eventually are holding a stock for such a long point of time. Having said that, we remain positive even during difficult times. Very recently, when a lot of people were advising to stay away from IT sector, quite a few, in fact, Nupur had written an obituary on the IT sector, thinking that it is all done and dusted. But we remain positive. Numbers for the first quarter, barring, of course, Wipro, were in line, and there was no huge disappointment. AI contribution is also coming through, and the verbatim given by the management across IT, including Infosys, post the Q1 number, is very strong as far as their progress and more investment in AI-related tools and platform is concerned. He's 750 and he's been holding it for 25 years. I'm sure, like I mentioned, the cost would be much, much less if he takes into consideration dividend and other benefits that he's got. Continue to hold on from a long-term point of view.
All right. Next question is coming in from Madhu, and Madhu plans to invest in Sirma and Avalanche Technologies. Okay, so she wants a buy price and maybe a technical view. Jigar, what would you recommend?
See, in Sirma, definitely there has been a positive momentum since last 3-4 days. First of all, the stock has consolidated on 21-day exponential average, and currently we are above the breakout levels of 1470. So yes, definitely one can go long in this particular counter. Stop loss would be below 1400, and overall we are expecting 1650 in Sirma SGS Technology.
Okay, another question coming in from Sarvana from Chennai. The stock that is holding is RIL, quantity is 100, entry price was about 1400, is asking a longish term question, says, will it give good returns in the long term? So Gaurang, what's your view on this one? Should he keep on holding that one?
Extremely positive, Nupur. And this is one stock, large cap, of course, as we all know it, which will appear in most of the large cap funds. The verbatim given by the management in terms of the new investments that they have made in new businesses, the numbers from the retail side, geo refining margins, and of course, the telecom has been extremely positive. There was also a reference made by the management of hiving of geo mobility and listing as a separate entity, which will create value unlocking for long-term investors. First of all, stay invested. If you get a dip below closer to 1300 or below 1300, if somebody wants to make a fresh investment, we would recommend that. And if you're holding it and if you have investable amount from a long-term point of view, I think closer to 1300 and sub 1300 would be a decent level to add more in case if you've gotten at higher levels.
All right, 1300 or below that, good time to add more. Well, with that, it's time for a short break, but stay tuned. We are still answering your stock specific questions. Welcome back. You're watching Buy Now, Sell Now. We are answering your stock-specific question, and Gaurang Shah, Jigar Patel, our guest on the show, are answering all of your live queries. Swaminathan Balakrishnan from Chennai wants to know about KPI Green Energy, and the entry price is 445. He wants to know if he can sell it now, in spite of good results every quarter. Why is it going down? All right, Gaurang, I'm not sure. Under your coverage?
Well, we are positive on the sector, but we don't have coverage on KPI Green. And one thing that I have always mentioned, Kavita, is that when you get invested in a stock and the investment is not going in as expected by you, then take appropriate steps before the capital start taking the hit. Gotten at 445 and the stock is trading at 371. So the capital itself has got eroded to quite an extent. The question that he is asked is whether he can sell at this point and invest in some other sector or stock. Now, if I have to recommend, since the question is whether you can sell, and if I want to recommend one investment idea in the defense pack, then that would be Bharat Electronics Limited, BEL, Kavita. Near about the levels, somewhere close to about 400, if I'm not mistaken. The last time I looked upon BEL was trading at. The numbers were very decent. Long-term outlook for the stock looks extremely strong. Order book is strong and it's growing at a very fast pace. So and my sense is that if he gives a little bit of longish time horizon by doing this shift from KPI Green to BEL, possibly he can make good of the losses that he's making and even come out in profit. But for that, he will have to initially book the loss, get invested in a BEL with at least 2.5, 3 year plus kind of time horizon.
Okay. Jigar, a quick tech check from you.
See, KPI green, again, the structure is bearish, but almost, if you look at the chart, almost we got a hint of 17 to 18% right from the top of 445. So as of now, there is no steam left for the downside as of now. Daily structure is trying to make double bottom with a divergence. So there is a possibility of short-term bounce till 400, 430. So that would be a level where we can exit and currently keep a stop loss below 360 on daily closing basis.
The next counter that we're focusing on is HDFC Bank, and Aarti Ramakrishnan from Hyderabad has a question on it. I think she's holding about 560 shares of that one. Entry price is 735. Wants to know, should I hold or accumulate or exit? The time horizon that she's looking at is 3 months. Jigar, what would you advise her?
See, in HDFC Bank, again, there is a buying opportunity. There has been a multiple bottom near 730, 720 mark, and there has been a positive divergence can be seen on daily as well. The divergence is as of now incomplete, but overall, based on other indicators, we are expecting a bounce back in this counter. So definitely, yes, even at this particular level, she can add and keep a stop loss of below 700. And overall, we are expecting a limited range in SDFC right from 700 till 800 zone. And 800 would be the target.
All right, next question is coming in from Ashutosh from Ghaziabad, and the stock is MRF. Entry price is 1,000,72. Wants to know till how long can he hold? He's in profits, Gaurang.
So, Kavita, as we were discussing, if auto sector has to do well, auto ancillary tire manufacturing companies and battery manufacturing companies will do well. And sometimes the name is enough, Kavita, when it comes to credibility. We used to cover MRF quite some time back. Our targets have been achieved very, very long time back. We've removed the coverage. Currently, we don't have coverage on MRF, but we are extremely positive on the sector, Kavita, that is tire manufacturing, because tire happens to be one of the most important and integral part of a vehicle, and along with that, safety of the vehicle. MRF, very niche and strong player in the tire manufacturing company, not in India, but they have huge export market as well. And the balance sheet is also equally strong. Won't give specifics since currently we don't have coverage in MRF.
Jigar, would you like to take that one quickly?
See, on MRF, again, there has been a consolidation since last 1.5 weeks approximately, and overall, the momentum indicators are, trying to get into a bullish structure. So as of now, definitely, even at this particular level, he can add. And overall, the major support is 1,30,000, and above 1,35,000, I'm expecting a breakout till almost 1,45 or even 1,150 would be the target.
Already, of course, he's sitting on a tidy bit of profit on MRF. Our next question coming in from Matthew from Kochi, and wants to know about Dixon Tech holding 50 shares. The entry price is 11,200. Should I hold or sell? Gaurang, any view on that one?
Well, so extremely positive. Once again, Nupur, on the sector that is chips, semiconductor, PCBs. There have been huge investments that have put in place even after getting the production up and going by a lot of companies in the sector. For example, Dixon is there, Amber is there, CG Power, PG Electroplast. So we remain extremely positive on the sector. One of the strong players in this sector, I would say one of the strong contenders. And along with that, they have got a huge and a positive manufacturing capability and capacity. So we have coverage on 3 names in this sector: PG Electroplast, CG Power, and Amber Enterprises. But Dixon Tech happens to be a very dominant player. And outlook in terms of earning visibility and the kind of PLI scheme and incentives that the government is providing for this particular sector, all the companies are likely to benefit.
All right, Jigar, very quickly, Dixon Tech, what would you advise, hold or sell? Entry price was 11,200.
See, as of now in Dixon Tech, since last 3 to 4 weeks, there has been a very stiff resistance in the zone of 14, exactly 14,100 till 14,500. And even this level aligns with previous breakdown zone along with the flat line of Ichimoku. So as of now, I would advise to book partial profit and stay invested.
Okay, let's move on. Let's take Sandeep Anand's question. He's from Punjab, and Magica World Entertainment entry price is 58. Jigar, if it's a short-term view, what would you recommend?
See, in Imagica, currently the structure is trying to improve on weekly structure. There has been a possible inverse head and shoulder, and the neckline levels are somewhere near 54, 54 and a half. So breakout is not seen yet, but above 54.5, definitely one can expect 60, 62 levels. And as of now, one should trail the stop loss with SL of 45.5 on daily closing basis.
Okay, let's quickly take a query that's coming in from Hector from Kolkata. The stock is Indian Hotels. He's holding 70 of those. Entry price was 773. Now, the question that he wants answered rather is he's been holding it for 8 months and has the capacity to hold for another 2 years. At what levels should he be adding? So, Jigar, what do you think on that?
See, in terms of Indian hotels, as of now, it is wait and watch. If we are getting any pullback somewhere between 690, 700, that would be the ideal level to add at that particular price. And overall, the structure is bullish, but in short term, we are expecting a pullback till 690, 700 mark. And overall, the target for next 3 to 4 months would be somewhere near 780, 790.
Dikshita wants to know about. Okay, Jagran Prakashan. She wants a fundamental as well as a technical take on this. Gaurang, I'm not sure. Would you like to give a fundamental take on this?
Kavita, I'll give it a pass. Honestly, we don't have knowledge on this one.
Jigar, any technical view?
See, currently this particular counter is extremely bearish on weekly as well as daily charts. So as of now, one should, I would advise to avoid this particular counter because the major breakdown can be seen below 59 on daily closing basis.
The next one coming in about Ashok Leyland. Anish from Pune is asking us, he's holding a quantity of 1,000 shares. The entry price is 172 and wants a 3 to 6 month view on the stock. Gaurang, I wanted to come to you on this one. Ashok Leyland is the counter.
Nupur, honestly, I think he should give it a little bit more time. And the way we were discussing about the auto sector, auto component, tire, battery, if he has time by his side, Nupur, I would request him to extend the time horizon. We have a positive coverage as a disclosure on Ashok Leyland. This one happens to be the pure commercial vehicle play with presence in light, medium, and heavy commercials. They have also got a subsidiary which is focusing on pure EV plays. A decent order across private sector and from the government as far as the road transport authority is concerned. Numbers have been extremely good for Ashok Leyland, and not only on quarter, Nupur, but also on month. If you actually go to see, they've been holding up quite well. Export market happens to be a huge opportunity with the number of FTAs that India has signed with various countries. So if time is by your side, give it a little bit more time to get better profits.
Extend the time horizon. That's a take coming in Ashok Leyland. And with that, thank you so much, Gaurang and Jigar, for taking your time out for our viewers today. Thanks. We'll take a short break. Post that, we'll be joined by Greenpanel Industries management to talk on quarter results. Stay tuned.
Much for staying with us on ET Now, and we are continuing our focus on the earnings season. Well, it's been a decent Q1 for Greenpanel Industries. In fact, Himanshu Jindal, the CFO of Greenpanel Industries, is now joining us. Mr. Jindal, good morning. Thank you for joining us on ET Now. Mr. Jindal, your numbers do look were good in FY27 with a revenue growth of more than 6% and margins have also seemed to improve. What really were the triggers behind this growth, and what is the top line and margins outlook for FY27?
So thank you for having me. Good morning to you all. So you see, our retail side of our business, both on the MDF and supply side, continues to do well. The retail MDF has been growing consistently over the last 4 quarters now. And this quarter also was no different. So we've grown our volumes by 20% YOY. Ply too has clocked a double-digit growth in volumes. On the other hand, the less value-accretive businesses or the revenue streams, which is OEM and exports, have been impacted in quarter one. These are largely price-sensitive segments, and there has been more uncertainty on cost at the moment. Therefore, committing price and volumes was a little challenging. OEM degrew by 14% YOY, while the export was 0 in quarter one. Given our own historical run rates in the last year, quarter two to quarter four, I think we could have easily done another 25,000, 30,000 on both of these. On the pricing front, as you're aware, we took a 15% hike in MDF in the last quarter in April. And given the uncertainty on chemical costs, we were more disciplined on our side in terms of the rollbacks, which some of our peers actually did. And this might have impacted some of our volumes for sure. On margins, you rightly said our gross margins and our operating EBITDA margins have all improved, thanks to the price increases, timely price increases. And there was also an effort on our side in terms of the timber mix and the fuel efficiencies and the power efficiencies kicking in. So despite a chemical cost increase, you see what you see in our results.
All right.
On the guidance, sorry, please.
Yeah, sure. No, I was just wanted to know about your operating EBITDA margin, improved from 4 to 10.3% in MDF. How much of this improvement is structural through pricing and efficiency, and how much was aided by lower cost inventory?
See, very honestly, we took if you look on a YOY basis, there was 7.5% coming in via pricing. If you look at our gross margins have gone up by 6%. So there is definitely a play of pricing coming in. But yes, we lost something on chemicals, and very, very clearly we built it up more via the timber cost, the timber wood mix, as I've mentioned, and the power and the fuel efficiencies. To give you a split, whatever we lost on chemicals was roughly around 6-7%. From an efficiency point of view, we got 1.5% floating into our contribution margins.
Now, with MDF domestic realization up about 7.4% YOY, how much further pricing power do you see? And are you seeing any resistance from dealers or customers to recent price hikes?
See, there has been a fair amount of rollback already, quarter one itself, in fact. Yeah, so we reacted a little late. But if you look at it otherwise, there is very aggressive at discounting continued by our peers. And we are reacting wherever we need to. On the cost front, things are very, very uncertain, to be honest. The chemical costs have come down from the peaks that we saw. But now, even today, the costs are very volatile, very fluid. On the other hand, so this is costs and margins and, pricing environments. But more importantly, I think the demand side is holding up. Yeah, I talked about our retail volumes. Very, very clearly, see, MDF is a homogeneous product, very value-accretive product economically. And therefore, the penetrations that we can have, is astronomical. Yeah. So I think, between all the wood panel segments, I think MDF is very clearly a choice from a consumer point of view. So that's holding on. But, given the macro environment on costs and pricing, I think guidances are becoming challenging, for sure.
Sure. Now, talking about export sales, in Q1 FY27, we did not see anything due to the ongoing war in the Middle East since March 2026. Now, how it has impacted to your revenue, and how do you see exports in the coming quarter now?
See, Jan said, when I sold via exports, we were running at a run rate of roughly 8,000 or 9,000 cubes a month. Yeah. So you can very well figure out, what I lost in quarter one on a monthly basis or on a quarterly basis. The underlying problem is obviously chemical costs. The underlying problem is also container freights. So whatever we were paying earlier, pre-war, that's kind of exploded now. It's almost 8x even today in terms of the container freights. Coming to what can we expect, I think, gradually things should improve, with normalcy setting in the Middle East. You should see volumes coming back. But it's going to be a graded thing. It's not going to be unlike what happened last year. Maybe the first 2-3 months are going to take some more time for volume build-up.
Mr. Jindal, appreciate your joining us on ET Now. Thank you very much for sharing your outlook with us. Well, in fact, with that, we're running out of time on Buy Now, Sell Now. It's a goodbye from Kavita and me, but do stay with us on ET Now as we bring you more.